Microsoft is one of the biggest companies in the world, and many people avoid investing in large companies because they are already big and they don't have great growth potential. But it doesn't mean it's pointless to invest in these companies. There are still multiple reasons why it might be a good idea. For example, low risks, low volatility, and high liquidity. Microsoft was founded in 1975. 20 years later, the company gets on the list of top 10 S&P 500 components and remains on it to this day, while this list changes every year. Microsoft's core business is the development of operating systems, software and hardware. The business model is constantly evolving, and today the company also develops in various fields such as cloud technology, the internet, artificial intelligence and video games. Microsoft's flagship products include the Windows operating system, document applications from Microsoft Office, Xbox game consoles, Bing Search, Microsoft Edge, Internet browser, and Azure cloud computing. Unlike other tech giants such as Google and Facebook that make almost all their profits from internet ad revenue, Microsoft has very diversified sources of income. And unlike Apple, Microsoft does not have particularly large debts. Despite being one of the biggest companies in the world, all companies' businesses show significant growth every year. Microsoft never disappoints investors, which is why the stock grows almost after every earnings report. The results of the last year have been especially impressive. The last year's success is largely due to a significant increase in revenue from services by 29% compared to the previous year. On the other hand, product revenue grew by only 4.5%. Product revenue refers to the revenue from the sale of operating systems, hardware, applications, and etc., while services revenue is generated through sales and subscriptions to cloud products such as Office 365 and Azure. Most of this huge growth in the company's revenue from the services is due to the restrictions imposed by coronavirus last year, when many companies were forced to find and switch to cloud services to make it easier for their employees to work from home. Maybe this increase in income will be adjusted when employees are allowed to return to the offices. On the other hand, perhaps we will witness the beginning of a new chapter in the working life, where employees will choose themselves where to work, in which case the income from cloud services can continue to grow. Microsoft pays reliable dividends since 2004. The company spends about 25% of its profit on dividends, and Microsoft quarterly dividend increased from 8 cents to 56 cents over the past 16 years. Moreover, the company was paying them even during the economic crises, unlike many other companies. The company also has exceptional profitability indicators such as return on assets, return on equity, gross margin, operating margin, and net profit margin. The future of the company looks bright. The idea to shift its focus to the cloud products was beneficial. The company enters the metaverse race and planning to invest in cybersecurity. Of course, we can't say that investing in Microsoft is completely risk-free. The company costs 17 times more than the cost of its assets. The company's price to free cash flow ratio is 57, and that's pretty expensive even for such a great company. Another risk is that the company's performance, just like any other big tech company, depends a lot on the key rate. Inflation is rising around the world, which is why the Federal Reserve can really increase the key rate. Since many businesses depend on the big tech companies, increasing the key rate will have an influence on their profitability. That's all for today. Thank you for listening, and tell in the comments if you are investing in Microsoft.